a lot of banks are going to go into what I call bankruptcy. They will go into liquidation if they actually live by the kind of advice they give a lot of us that are saving money or putting money in the banks. You see, there are so many secrets, there are so many things that banks are not telling us, and I need to make you to understand that when you actually put your money in the bank, it does not guarantee financial freedom or financial independence. So banks are always giving us advices, professional advices, they will call it, that you need to save your money in the bank, you need to put your money in the bank, and so many other things like that. But there are some hidden, things that we are not being told or we are not aware of, and that is why this video is actually there to open your eyes of understanding. I'm not saying you should not put your money in the bank. I'm not saying you should not invest your money in the banking sector of the economy. I'm not saying you should not save money in the bank, but rather you should be a smart investor. You should be smart in your finances, and you should be very smart in when it comes to the issue of money. You see, a lot of banks will advise us on so many things. So banks will always motivate you. They will always tell you to save your money in the banks. But banks don't save the money. When you save the money in the bank, there is a circular, there is a system that which I'm going to tell you now. Now, when you actually put that money in the bank, banks don't save the money that you have actually put in the bank, but rather the bank will actually invest your money. So the period or the time you actually put that money in the bank, banks are actually giving that money to other people. They are borrowing that money or lending that money to other people, in which they actually pay their interest at the end of the day. And that's why I always tell people that I'm not saying you should not put your money in the bank, but rather the money that you pay in the bank for should be for emergency and for spending. But any money that has to do with investment should not be put in the bank. So when you put that money there, the banks don't save that money. They actually put that money in the bank, but they don't save that money, but rather they actually invest the money. So they invest the money you have actually saved in that bank through what I call credit card, mortgages, loans, and the rest of them. They give out all these facilities to people out there. They lend that money out, and while they are lending that money out, the banks are actually making profit for themselves. So in other words, you are actually making other people rich when you are not actually rich. And you ask yourself, at the end of the day, what is the interest accrued to you when you actually put this money in a bank account? You will discover that the interest is just a minus, maybe 1% or 2% of the money you actually put in that bank account. So through this, you are making the banks to be rich, and they're richer every day. So every money you actually put in the bank account is actually lended to other people, because if your money is actually retained in the bank, it's going to create dust. And when it creates dust, that means the money is not functioning, the money is not working at all. The money is creating dust, and the banks need to give that money to those that needed that money. So they will borrow the money out, they will lend the money out to those people, and those people will actually pay the bank's interest at the end of the day. And the funny thing is that when the money is given to that individual also, you know what he will do with the money? He will use that part of the money to go and still put the money in the bank again. And that bank B, which is putting the money into it now, will also follow the same process. And that is how the circle will continue like that. So you keep the money in the bank, the bank lends the money out to someone, and the person also will deposit part of that money in the bank, and the circle will continue like that. So bank A, bank B, bank C, and all the banks where this money is what is going through are all making profit at the end of the day, lending the money out and collecting interest at the end of the day from the customers that are actually, borrowing money in forms of credit card, in form of mortgages, in form of buy now, pay later, and the rest of them, easy buy, and the rest of them. So the banks are making a lot of money. Why the individual that putting the money in the bank and left with nothing at the end of the day? So I am going to be looking at those factors or those things that the banks does not want to know when it comes to the issue of money being put in the bank. You need to know that as a result of this, a lot of people are actually living in debt every day, living in debt from day one to 365 days in a year, they are paying debt at one particular time or the other. Because the banks, if you don't borrow money from them, they can't make money. If the banks do not lend money out, they can't make money. And that's why I said at the beginning that if the banks actually live by the advice they are giving us, a lot of banks are going to fold up, they are going to go into bankruptcy. Now, what are those things that the banks does not want you to know about? I'll be talking about them now. The first thing is that your savings are asset for the banks, but a liability to you. Your savings are actually an asset to the bank, but a liability to you. Now, what do I mean by this? Your savings is actually an asset to the bank, but a liability to you. When you say this, what I'm saying here is that the money you actually save in the bank is seen differently by the bank. You put the money in that bank as a savings, but it is being seen in a different way by the bank which you have actually put the money. So they take the money through what I call a fractional reserve lending system. A fractional reserve lending system. That is, when you put the money there, they lend the money out to somebody else by giving that money to other people requesting for the money. But giving the money to other people requesting for the money is not actually free. The bank is going to charge for interest for those that are actually collecting that money from the bank in form of a loan, in form of a credit card, in form of mortgages and the rest of them. So through fractional reserve lending system, banks actually give this money out to those people that are actually needing or that actually need that money from the bank, and they are actually charged the interest at the end of the day. And that's why your savings is actually an asset to the bank, but a liability to you. It's an asset to the bank because it is actually generating an interest for the bank, but it's a liability to you because it is not generating anything for you. What you actually have in the bank account is the actual money you have put in the bank account. So, what for example now, if you actually put 1,000 naira in your bank account, what you have there at the end of the year is still your 1,000 naira. But the bank will make maybe, for example, 750 naira at the end of the year or financial year over that 1,000 naira you have actually kept in the bank. So your money is stagnant there, but on the other hand, your money is being given out to other people, generating revenue for the bank, and the bank is becoming richer while you are not making any money at the end of the day. So the bank actually gets interest when they give the money or lend the money out to people out there. So you need to use your banking system to your own advantage. And for you to be able to use your banking system to your own advantage, we are talking about financial education here. You need to know about the banking system, the dynamics of the banking system, the world's financial system, which is capitalism, the dynamics of capitalism. So you need financial education to be able to understand this precept or this idea or ask actually what's going on out there in the banking world. Number two is that the bank is not your financial advisor. A lot of people will say, if I want to do something, I will need my financial advisor in the bank. They will approach the bank for business ideas. They will approach the bank for ideas or advice and the rest of them. You need to understand that your bank is not your financial advisor. The bank is there to make money. So irrespective of the advice you're going to get from the bank needs to make money out of you. So going to the bank for financial advice is a counterproductive idea. What you actually need is what I call financial education. So a lot of people actually have little ideas of what to do with money because they lack financial education. They have that money, they squander it, they waste the money, they spend the money extravagantly, buying liabilities, buying things that cannot add value to their life, buying what I call junks, or buying what I call dumps, or buying things that cannot add any value to their life because they have little idea of how to handle money or what to do with money. You see, money is actually a spirit, and when you have money, you need to save some part of this money and you need to invest some part of this money. By 12 o'clock today now, I am going to get my interest from my bank based on my investment portfolio with my financial institution. And that is why financial education is very important. That you need to know what you need to be doing with money. That every financial month, when you get your salary or when you get paid for the services rendered, you need to split that money into three parts: into spending, into savings, and into investment, which I'm still going to talk more on it. So banks are actually making money when you take loan from them. When you take loan from the banks, when you borrow money from the banks, they are actually making money. So that's why your bank is not your advisor. That's why your bank is not your financial advisor. That's why even when you go to that bank, they have a cardinal idea. They have a cardinal, idea, which is what I call making profit from you. The bank is actually created to make profit from you, not being your financial advisor. At the end of the day, you still go back and borrow money from them, and when you borrow money from the banks, you are actually making money for the banks. Number three things that banks do not want to know is that banks love it when you actually spend the money you don't have. They love it when you actually spend the money you don't have. You see, a lot of us actually spend the money we don't have. In most cases, we both go to the bank to collect credit card. We go to the bank to collect loans. We go to banks to get or mortgage and so many other things like that. And at the end of the day, what happens? We are going to pay in form of an interest or in form of a profit to the bank. So banks are actually making money. So the banks love it when you actually spend the money you don't have, because the money you're actually spending on those luxurious goods, on going on vacation, on buying cars, expensive shoes and shirts and the rest of them, they are actually the money that you don't actually have. And when you don't actually have the money, you actually approach a financial institution who is ready and willing to give you that money at that particular time, because he knows that he's going to make money from your pocket at the end of the day. So you are making them rich and creating holes in your pocket. So before spending your money at the end of every financial month, before you actually spend that money, you need to have a budget. You need to know how much you have in your bank account. You need to know, because a lot of us, we just spend money, we don't actually plan. We don't have a budgetary plan at the end of the day. We just spend money recklessly, extravagantly, no plan at all. Imagine you are earning 10,000 in a month and you don't even know that when you earn that money, you are supposed to split that money. You are supposed to have a budget. How do I want to spend? How much am I spending on transportation, on feeding, on clothing, on house rent, on bills and the rest of them, recharge cards and the rest of them. We don't have any of those plans. So once that money comes, people start spending the money. And at the end of the day, what happens? Before 7 days or 10 days, the money is already gone. And what are they doing now? They have to go and borrow money. When they are borrowing money, they are creating wealth for other people. So bank love it when you actually spend the money you don't have at the end of the day, when you actually approach them for loans, for credit cards and the rest of them. Because at the end of the day, you are spending the money you don't have and you are spending your future today. So in the future, at the end of the day, what are you going to spend when there is no more job? What are you going to spend when you are not working any longer? What are you going to spend when emergency actually happens in life? And this is the precarious situation most people find themselves in this part of the world and that part of the world when they don't actually prepare themselves very well. So you need to control your spending overflow. You need to control your spending overflow, your insatiable urge for everything, most especially liabilities or things that cannot add values to your life. You need to cut your spending on those things, like buying expensive cars, because buying expensive cars now, apart from the fact that you're going to fuel it, which is very expensive now, you are still going to service that car. And that's why today you see a lot of people selling their cars. They cannot maintain the cars any longer because it is very expensive now to drive cars in Nigeria. You get it now? So you need to know how much you have in your bank account before you even spend that money, so that you will not overspend the money. And at the end of the day, you are now spending or borrowing money which you don't have from the banks, and you're going to pay a lot of interest on it. Presently now in Nigeria, borrowing money from the banks is not even advisable because it is about 24%. For example, if you collect 100,000 naira from the bank now, you are going to pay 124,000 naira. That is 24% increment in what in interest rate. And that's why if you watch my previous video that I did some time ago, 2 days ago, I was talking about how the interest rate actually affects economic development in Nigeria. The interest rate is killing a lot of people in this part of our world because the interest rate is very, very high. And that's why the economy is not growing, which is an area the government needs to look to. That when the interest rate is actually reduced to parents minimum, a lot of people can approach the bank and borrow money from the bank and use the money for one investment opportunities or the other to do businesses, to invest the money and grow the economy. Because when people are actually, investing money, spending money, that is when the economy is what is robust. It's going to be resilient. It's going to be very, very strong, which is one of the secrets being used by the advanced countries when it comes to money making, when it comes to having a resilient and a very vibrant and strong economy. So you need to know how much you have in your pocket before you start spending that money, so that at the end of the day, you will not end up borrowing money from the financial institutions, which are going to pay a lot of money as an interest on those money you have actually borrowed from them. Number four things that a bank does not want you to know is that you can actually own a bank. Now, somebody will ask, what do you mean by owning a bank? It's going to be very expensive. It's very expensive owning a bank in Nigeria because we are going to have about 26 billion naira to actually own a bank, to actually establish a bank in Nigeria. So it's not a dream country, it's a mirage, it is utopia. It is not possible for one to actually be able to generate 26 billion naira now. So owning a bank is not going to be possible. But I can tell you categorically, emphatically, with facts, that you can actually own a bank in Nigeria. But the banks does not want you to know that you can actually own a bank. And that's why financial education is very, very important. If you have financial education, you will know most of these things, that you can actually own a bank. Now, what are the ways through which you can actually own a bank? So you can own a bank by trading on the floor of the stock exchange in Nigeria. We have so many banks in Nigeria: GTB, Guarantee Trust Bank, Zenith Bank, Access Bank, Keystone Bank, UBA Bank, or Stanbic IBTC Bank, and the rest of them. They are actually all over there. And all these banks are actually traded on the floor of the Nigerian Stock Exchange. So you can own part of those banks by buying shares into those banks. When you buy shares into those banks, you are also a co-owner of those banks. Now, for example, imagine you having 5% of your total investment per annum on these banks you have actually invested on. Maybe you actually buy shares from Zenith Bank, or you buy shares from maybe Access Bank or First Bank or any of those banks, and they are giving you about 5% returns on your investment per annum based on on dividend payments. At the end of the day, that means you are making money for yourself. So you can own a piece of that bank by investing into that bank, by buying shares of that bank or those banks. So you could buy some shares in your bank by becoming a co-owner of those banks. So when you buy those shares, you have actually become a co-owner of those banks. So instead of you actually borrowing money for those banks, looking for mortgage, financial support, looking for credit cards, borrowing loans, and the rest of them, you can actually be a co-owner of those companies. Now, that profit which those companies are generating for you per annum can be added to buy those things that you actually desire for yourself. You can use that profit to buy your car, or service your car, or pay your house rent, or go on vacation, or go to an expensive restaurant and eat that food you have always wanted to eat, to live your dream life or Nigerian life, that you actually wanted at the end of the day. So we're saying here is that you can actually buy shares in those banks. And when you buy shares in those banks, you are actually sharing in the profit of those banks or mortgage financial institutions, or financial institutions that are actually listed on the floor of the Nigerian Stock Exchange. I think 3 months or 4 months ago, most of these banks were selling shares, and a lot of people actually bought into this share. But I don't buy or deal on Nigerian shares. What I do is money marketed funds, dollar funds, and the rest of it, which is more profitable and generating more interest at the end of the day than even buying buying shares in any of these Nigerian banks. So the choice is actually yours. You have the choice to make for yourself. So you can buy into any of these banks by becoming a co-owner and sharing part of the profit of these banks. Number 5 things which banks do not want you to know is that you need to have a savings goal. a savings goal. They don't want you to know that you need to have a saving goal. A lot of us, when we get this money, 365 days in a year, we don't even have any form of saving. We spend the money, we get the money, we spend it. We live like those I call low income earners or the middle class. We are not living like the higher class or the richer class. We live like the lower class and the middle class. Who are the lower class? Who are the middle class? The lower class, once they get the money, they spend the money. For the middle class, once they get the money, they use it to facilitate or increase their credit score so that they can have more access to more loans in the bank, to more credit cards in the bank, and they can use this money to live their ostentatious life, to live their flamboyant life, to look rich, which at the end of the day, they are paying a lot of money to the banks in form of interest for the money they have actually borrowed. So banks don't want to know that you need to have a savings goal. You need to have a savings goal for you to be able to survive in this harsh economic condition, in this harsh inflationary trend. So you need to save money. So saving money is very, very great, but you must have a goal. You need to have a goal because life is what is can happen at any time. You can be going on the road now, anything can happen to you. But when you don't have any savings, you don't have any form of investment, you don't have any form of money that is set aside for emergency, there might be a problem. You might lose your job, you might have an accident, you might have an emergency, you might have life happens, anything can happen at any time. And that is why when you get that money at the end of the month, you need to split that money into three parts. You split the money into savings, investment, and spending. The savings is actually for emergency. You don't touch the savings. The savings is actually for emergency. You only take from that money when you have an emergency, something that is an emergency, something that you never planned for, something that is unexpected. That's an emergency. So you can take money from that savings and use it to solve that problem. And I always tell people, when you talk about savings, it is something that you have to be doing every month, every month. Setting aside some certain amount of money for your savings for emergency. For example, if you lose your job, you can still be able to feed your family for the next 3 to 6 months, even without any job. That is part of the emergency we're talking about. Even when there is nothing, the money they've actually set aside for emergency is what you can now depend on till when things are going to be back to normal. So you need to prepare for what? For emergency. So you must also set aside money for what I call the investment. When you talk about investment here, there are money you don't even touch at all. You are actually, doing what I call a decade of sacrifice, in which you are saving, you are putting that money into investment every month regularly for a period of at least 5 to 10 years. That even when you are now retired or you are not working again, money is working for you already. You see, the beauty of investment is that when you start, it looks very, very small. But when you are consistent in it over time, it's going to compound and become so big at the end of the day. For example, if you are able to invest 1 million naira every year, that 1 million naira is going to get you about 240,000 naira every year. So that means you are going to be paid 1,240,000 naira. Now, once that money comes, you don't touch it again. You reinvest it into the investment and it continues to yield more money. In the sense that in the next 10 years, that 1 million is going to translate to about 20 million naira, if not more than above 20 million naira. And you know what it means that when you have 20 million naira in a different economy now, you can be paying yourself from that money every day. Even when you are not working again, your money is already working for you. Number 16 that the banks does not want you to know is that you can actually use your bank to make money. Do you get it now? A lot of people say, how can I use my bank to make money? Apart from the fact that you are actually buying shares into your bank, which makes you a co-owner of the bank, you can also, make money from your banks. One of the ways through which you can actually make money from your bank is that you can actually ask your bank or your bank financial advisors that you wanted an high interest yielding account. High interest yielding account. Do you get it now? High interest yielding account. Or you can even go for what I call a fixed deposit. Do you get it now? Fixed deposit. They can ask you, you can tell them, I want to fix my money in this bank account for the next 1 year. At the end of the day, they will pay you interest for that 1 year that they actually put that money into that bank account. I think presently now, if you have a fixed account in Nigeria, you'll be paid about 4% or 3% of the total amount of money you are put into that bank account for that period of time. So you can actually make money from your bank when you actually, ask or request for high interest yielding savings account, or you can go for what I call a fixed account. Then apart from that, the second thing on how you can actually make money from your bank is that you can actually go for a loan. You see, when you talk about loan, this one is very, very dangerous. If you don't have a business that you want to do that can yield money for you at the end of the day, please don't go for loan. It's not advisable. It is very, very dangerous. Most especially, you see, most people they will go for this loan. I've seen the situation. I've seen someone, even my workplace, some time ago, that got this loan, and the first thing he did out of that month, out of about 1 million naira, he used 50,000 naira to just enjoy himself for just one night. 50,000 naira out of 1 million to enjoy himself, and he was proud to say that I actually enjoyed myself, had a nice time. It's my money. It's not your money. It's money you've actually borrowed from the bank. And when you actually borrow this money from the bank, it's supposed to be used for productive purposes. To get it now. So if you don't have a business that can yield money from you, don't take money from the bank. To get it now. So borrow money from the banks is actually good if you actually have a business you want to push that money into. You understand now? So you can take the money from the bank to actually buy what I call cash flow producing assets. Cash flow producing assets. What are cash flow producing assets? Cash flow producing assets are assets that can generate, regular income for you. So we call them cash flow. They are, businesses or things that you can do that can regularly generate income for you. So you can actually put that money you wanted to borrow from the bank into cash flow producing asset. For example, you can put that money into what we call real estate, or you can put that money into what? Into your own personal business. So you can actually make money from your bank when you, number one, ask for high interest savings account, or you go for what I call a fixed deposit, or you can borrow loan from your bank when where you can actually put that money into cash flow producing asset like real estate and businesses, your personal business. Finally, number 7 things that the bank do not want you to know is that bank actually love it when you are financially stupid, or financially dumb. I saw something on the internet yesterday where a ship was actually pursuing a man with a sack, and that guy actually used the sack to cover himself right in the front of the ship. The guy covered himself with the sack, and the ship was still looking around for where the man had actually gone into. And as the sack was even moving, he was even looking what is inside the sack. That's actually how some people are. You understand now? Because banks love it when most of us are actually financially stupid, when we don't have financial education. Do you know how much banks are actually making from most of us in a year when we actually go for credit cards, mortgage, finance, loans and this? They're making hell of the money. I could remember some time ago, a friend of mine, asked for 200,000 naira from the bank, a mortgage financial institution, and he was asked to pay 270,000 naira. 270,000 naira. Now he's paying over 91,000 naira every month for the next 3 months. So he's going to pay 73,000 naira on 200,000 naira. That is nonsense for 3 months. That is outrageous. That is suicidal. So banks love it when most of us are financially stupid. Like that a ship I've just given an example of. So banks love it when we are what? We are living in debt. They love it when most of us are living in debt. When you are paying loans to them, when you are paying interest to them, when you are paying for what you have actually bought from them. Banks are always happy about it. And that's why they have an open door policy where they open the door for you, provided you have collaterals or other means of payment, or of means of showing that if you are unable to pay this money, this is what's going to happen. So they will give you the money. So you see, so they love it when most of us are actually financially stupid. We collected 200,000 naira to pay 273,000 naira. And he had no choice because he was in a tight corner, because he did not plan himself very well. And at the end of the day, it's pain and regretting today. So that's the situation most of us actually find ourselves. So banks actually love it when we are living in debt. When we live in debt, the banks are actually making money. So they love it when we use money to buy liabilities or dump things or things that will not create values. Because when you buy liabilities, you are going to finance a liability, and that liability is not going to generate more money, any money for you. So liability is actually a running cost. It does not bring any yield or any profit. There are so many liabilities out there. So anything that will not create money for you, don't use your money or put your money into it, or don't borrow money to finance such a thing. Some people use their money, you borrow money to finance cars, to finance a vacation, to finance. This one is even more peculiar in advanced countries where most of them live on credit cards. They live on credit cards debt, and they are making a lot of these banks and most of these mortgage financial institutions richer at the end of the day, while they are becoming more poorer. And the beauty of this thing, mortgages and these loans and the rest of it, is that they will give a long period of time. So the more long period of time they give you, the more indebted you are to them, and they're always happy about it. So they love it when you buy liabilities or dump things. So they love it when you buy things that you cannot afford. See, if you remember, I was saying before that before you spend your money, look at how much you have in your bank account so that it can guide you. So they love it when you buy things that you cannot actually afford, because when you are actually going for those things you cannot actually afford with your money, it means you are coming back to them to come and borrow money. So they love it like that. So banks love it when you are buying things that you cannot actually afford with your own money. And that is why it is very important that before you buy anything, you must use your physical money to buy it and not the money you have actually borrowed from the banks. So if your money cannot buy it, wait till when you can raise that money. So people will tell you that before that money is even completed, other things will come up. Of course, other things may come up, but if you are very disciplined with your finances, you can achieve all these things at the end of the day. Those that actually make it today, they are those that actually have what we call financial discipline. So you need to discipline yourself financially. There are some things you don't buy. There are some things you can buy. Like one of my colleagues was saying that this year his children are not going to buy clothes for Christmas. And I was wondering, guy, why do you have to take that decision? And he explained to me that if he actually use that money to buy Christmas clothes, he's not going to buy anything at the end of the day. So imagine if you give your child 50,000 naira to buy Christmas clothes, that money will not buy more than one clothes and one shoe, or it might not even be enough to buy those things. So he decided that after the new year, he's going to buy those things. Then on the second, he gave the money to the wife. And at the end of the day, by the time she came back from the market, she bought so many clothes that the whole house was full of clothes. And the children were appreciating their father for the decision he actually made concerning that. And that's a lesson for all of us. What you cannot financially afford, don't force yourself to do it. Because at the end of the day, you may end up blaming yourself. Finally, I'll leave this with you. Debt is when you spend your future income today. Don't spend your future income today trying to impress other people, trying to look rich, trying to to be flamboyant, trying to create an atmosphere of what you are not. Live or cut your coat according to your size. This is 2024. Don't be extravagant. Buy those things you can actually use your money to buy. Don't buy liabilities, but rather this year invest more of your money into investment portfolios. And I can bet you, if you can consistently do it before December of this year, we are going to be grateful to Almighty God for the decision you have actually taken. So on this note, I'm going to stop this video. If you have actually gained something from this video, please click on that like button and subscribe to this channel. And don't forget to share the videos to the outside world. Till I meet you next time, thank you so much and God bless you. Bye bye and happy new year.